Hey guys, what is going on? Welcome to another YouTube video. This one is the simplest way to trade the Forex markets. Okay, so let's get straight into it. So basically, I'm trying to capture all the ways to trade the Forex market into one, okay? Because at the end of the day, it's a simple flow progress in how we actually decipher the market, work out the market, and trade the market, right? So I'll put this to a simple 4-step process. Let's work out step number 1. So first things first, market structure. All right, so the first thing to identify with the Forex market is that it usually or it always moves in different waves, okay? So the market structure, we can either have an uptrend market, okay? So prices making high lows and high highs. We can have a downtrend market, prices making lower highs and lower lows, or we can have a consolidation. So prices making the same highs and the same lows, okay? Now, these are the 3 main important market trends that the Forex market has, right? So in an uptrend, basically price is pushing up because there's so many buyers in the market, okay, in the short term. And for the downtrend, there's so many sellers in the market. Now, when price consolidates, it's basically indecision in a sense that buyers and sellers are trying to work out where price is going to go to next, okay? Now, the reason why we actually identify our market structure is because the first thing or the first step in any single, any strategy or any way to trade the Forex market is to identify the trend. Why do we do that? It's because basically whenever we want to make a decision in Forex, we want to make it with everyone else. So if everyone else is buying a currency pair, we're going to look to do the same thing. If everyone is selling a currency pair, we're going to look to do the same thing. We're going to sell with everyone else. Now, the reason why we do this is because it puts us at an advantage and gives us an edge in really trading the market to try to capture those big moves, okay? So if the market's uptrending, we're trying to look to buy. If the market's downtrending, we're going to look to sell. Now, if the market's consolidating, I prefer not to trade at all because I don't really have that edge. I don't really have that directional move in my favor. So I usually just wait for price to work out where to go to next. So if price breaks out of this consolidation, it could continue up or could continue down. That's when I would actually look to trade, when these trends start to form, okay? So step number 1 of actually trading the Forex market is to identify the trend, okay? Now, step number 2 is what I call AOV. Basically stands for area of value, okay? Let's write this out for you guys. So what this means is that whenever the market makes a move, we need to think of an opportunity when to actually buy or sell, okay? So this is really trying to work out, okay, when is a good time to buy or sell, all right? Now, the market always moves in waves because people are constantly buying and selling it. If people were just buying the market, it would go up. There would be a straight line like that. If people were selling the market, it would go down. If no one was, if the market was just moving, it would go sideways. But because people are buying and selling, we have these movements in the market where either more buyers in the market pushing price up or more sellers in the market pushing price down, okay? Now, at these points in the market, this is what we sort of call, or what I like to call, an area of value, okay? So if I'm looking to buy in the Forex market, I'm looking to increase the value of price going up, right? Make money of price going up in value. I need to look for an area of value, and that area of value is these lower lows, is these high lows being made, okay? Prices moved up because there's more buyers in the market. Buyers have taken profit, in a easy way to make sense of it. Buyers have taken profit. Price has corrected itself. Another impulse of people buying again will push up. So we have buyers pushing price up, people taking profit, price pushing down, and then again price pushing back up, okay? Now, at this lower high or high being made in this situation, high, this is a lower high. This is what I like to say, an area of value. So this is a good opportunity for you to either buy or sell according to the trend in the market, okay? Wait for these area of values to form. Okay, that's step number 2. Step number 3 is confluences. Now, what does this mean? Basically, if you know anything about Forex, we have all these technical analysis tools. So we have stuff like everyone calls it differently. I call it a support resistance level. We have stuff like trend lines. We have stuff like a fib. We got candlestick patterns. Those are 4 confluences, okay? Let's just leave those 4 simple ones on, okay? So what this means is that once we have an area of value, right? So let's say we want to buy in a market, okay? Once we have an area of value, so once price comes to an area of value, all this is telling me is that, okay, this is an opportunity to perhaps buy or sell with everyone else, right? Now, in order to make this area of value strong, in order for this setup to be a strong setup, all right, it needs to be in line with some confluences, all right? So an example of a confluence is a support and resistance level, okay? So once price reacted to support, price broke through and it came back and acted as support, bouncing off the old resistance, new support line, okay? That's a support and resistance level. We also have a trend line, which is a horizontal support and resistance level. This is in line with the support level. We can also have a Fibonacci, which sort of measures the waves in the market, okay? And we can do a candlestick, which is, you know, a candlestick pattern. So let's just draw, you know, a sort of hammer, for example, like that, okay? So at this area of value, at this opportunity to buy and sell in the market, okay, this is an opportunity to buy because we're in an uptrend and prices came down, okay? In this opportunity, I have price has come to a support level, which is crossing the trend line, following the trend, you know, sort of come to a 38% Fibonacci retracement, and has shown me a wick rejection. So shown me a bullish candlestick pattern, okay? This is how you use confluences in trading, but the confluences need to be lined up with the whole movement of the market, with the whole area of value. It has to all come together, okay? So that's step 3. Now the last step is confirmation. Now there's sort of 2 ways to do this. When price comes towards an area of value, usually you see indecision. So you see candles that show you that price has slowed down, people have taken profit. There's a bit of indecision in the market between buyers and sellers. And the last thing you see is momentum, okay? Now, these are candlestick sort of patterns. So what I mean by that is, I mean, price might come to an area of value. Okay, so prices come up. I've got my, let's say I've got my support level at the last move. Okay, and then price comes to an area of value. All right. Now at this level, I might see a bit of indecision on the lower time frame. So we've got, you know, candles like this. With not really much happening. Okay, and then all of a sudden I see a massive bullish candle. That's telling me that buyers have entered, pushing price up. Now, I would call this indecision, and I would call this momentum, okay? Now, these are 2 really good confirmation, candlestick confirmation patterns that will sort of tell you a good indication of what the whole market is doing, all right? Now, if the price is if the whole market is buying at this level, this is what you want to do. You want to sort of jump on with everyone else, okay? Now, confirmation is probably the most important thing, because getting a good entry, controlling your risk management, getting good risk in any trade, getting a good risk reward ratio, so a good profit target, really means you're going to get in at sort of a good time, okay? So this is probably the simplest way to trade Forex. So in four simple ways, we have a market, okay? We have to identify what market is going on. Do we either buy or do we sell? That's step 1. Step 2 is wait for price to come to an area of value, okay? Now, this area of values will usually occur when the market is trending and when the market pulls back. So this is the pullback right here. Now, every single trader has their own strategies of doing it. Some people may trade pullbacks. I know it is probably the most popular sort of strategy to trade a pullback when price comes back to a level, following a trend. But everyone has different ways to do it. I prefer a downtrend. If I'm trading a downtrend, I like to look for a double touch of the level. So I look for a double top of the resistance level. That for me is a really good setup for me to trade. Some people might just pull out the fib and wait for that sort of pullback to happen. Some people might just, you know, wait for a double touch of the support level like that, and then bang, take that as a signal to go up. It doesn't really matter how you like to trade the markets, as long as you can identify one that the market structures or the market's trending. We try to catch those area of value, so wait for price to come to that area of value, set your alerts, you know, have a look at your weekly setups and see, okay, how long do I have for price to come to this area of value? You check it every single day. When price is at that area of value, the more confluences they are, or you have, the stronger the area of value is. So if I like to have at least 3 or 4 confluences for me to say, okay, this is a good area where I might see buyers or sellers enter. Now, in order for me to actually see that, I've got to wait for the confirmation. And those are the 2 confirmation candles. Oh yeah, there's a lot of confirmation candles. Also a double top would be a confirmation because prices failed to move up twice. Therefore, sellers getting rejected. Buyers are getting rejected, sellers pushing prices down, stuff like that, okay? Okay, so now that we sort of understand those 4 different steps to trade in the market, a lot of you guys are going to be like, okay, well, how does that actually work in the market? What does it look like in the market? And, everything like that. So instead of showing you right now what it looks like, I've actually, in my Discord, I do share every single week some weekly trade setups. So I share about 4 or 5 every single week. And these are all priced coming to a strong area of value. Okay, so let's take a look at some of them. So this is on 80 Swiss, so CHF. Prices come to a double touch of the resistance level at a trend line at a 61% Fibonacci retracement following that downtrend. So price at a good area of value. Now these area of values still need to wait for the entry. So there's another whole entry strategy video I need to make. But this is just telling you that price is at a strong level in the market to continue down. Price has continued that pullback. Okay, so one opportunity, AEJPY, the same sort of thing set up. Euro GBP, so prices following the uptrend came to a support level at the trend line, and obviously Fibonacci there too, following those moving averages. So moving averages is an indicator and is another form of confluence that you can use on your trading. Another example on JBP New Zealand. So price following the trend line, triple touch, so triple bottom of the support level at the trend line, following the moving average, and the counter confirmation of the good direction. 4 really nice confluences right there. Okay. GBP CAD, so for obviously a sell position there. Another New Zealand CAD on a sell. That probably isn't the strongest area of value because I would sort of wait for price. If it does, it might not. Price might not do this, but if it did come to the corner of this trend line, that would be a really, really strong setup for me. So, this is a good example of, okay, price is sort of at a good area of value, but not the strongest because it's only really respecting this resistance level and following the moving averages. So if price did include the trend line and a weekly direction, that would be another 2 confluences that I would be interested in trading at a really good area of value. So this is an example of the last one, but even better. So price has actually come to the corner and is showing sellers enter by this candle. So showing rejection at that level, that would be a good indication for me to sell. This is the stochastic indicator, another confluence. Don't stress about it too much. USD CAD. ADCHF for a buy. That sort of did break the trend line, so I wouldn't call that a high probability setup. This is a really strong setup too, following this bullish channel, and price giving us a massive wick rejection, showing us really good sign of bullish momentum. JBUSD, the same setup, double bottom of that support level. EURUSD sort of showing you when price does come up this resistance level, that would be a good area of value to sell. So price isn't there yet, but it is going to come up there. USD JPY, New Zealand, EURUSD. Anyway, you guys get the point. So in my Discord every single week, I post 4 or 5 setups. Just to, after I do my analysis for the week, just to give you guys some good charts to work with. But what I'm trying to say is that there will always be opportunities to buy and sell in the market. You just have to look for them. I have all these different currency pairs. And when I do my trade setup, I always look for good area of values where I might look to trade for the week. So I do my analysis on the Sunday night, and then during the week, I wait for price to come to the area of value, and I see how it respects it. If it respects it, if it breaks through, and if I can get an entry on that position following the trend. Okay, so that's sort of how I trade. And the opportunities I do present are in my Discord. If you want to follow, you don't have to, it's fine. But just to give you an idea of what this actually looks like on a price chart. So I hope that was helpful. This is, there's so many strategies around Forex, so many different ways you can trade the markets, but it all really comes down to these 4 different steps. Everyone has different rules they like to follow. But if you can understand that, the market moves in a certain way, identify the market, wait for price to come to an area of value, line up your confluences, and wait for that momentum, wait for that candlestick confirmation, that's going to really help you give an edge in the market and sort of give you an idea of how to actually trade the Forex market in the simplest way. Okay. So I hope you guys enjoyed that video. I try to not make it complicated. I try to make it simple. But because at the end of the day, Forex isn't really complicated. It is actually quite simple once you understand the technical analysis behind it. It's not complicated. The hardest part is actually trading, live trading, handling psychology, but that's for another video. So I hope this was helpful. If you guys liked it, do subscribe. We'll be making more videos on a weekly. But that's it for today, and I'll see you guys after.